Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, September 30th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading was a fairly significant candle where we had a change of trend back to the downside. Prior to that, we had the market testing above the 1700 level, and the market was rejected from that area. The day following that rejection, we saw some decent follow through with the trend changing back to the downside and the market trading down through the window and therefore closing the window. Significantly, however, the market failed to close down below the window, so there was still a possibility of that area acting as an area of support, and the area at 1687 had potential to act as support. Today the market has opened pretty much at that 1687 level and traded down through there for the entire trading day, and this does suggest that the sellers have some decent downside momentum in this market. Looking at the colour of the body, we have a black body candle once again, so a continuation of the momentum in that short-term time frame in net terms. So the sellers have made a decent amount of net bearish progress on the day between the open and the close, and if we look at this sequence of first and now second time frame downtrend, we have mostly black body candles and only one white body candle and a very weak white body candle as well, so quite a significant dominance by the sellers in net terms. However, having said that, we have a large shadow on the bottom of this candle, and this suggests that the market has been rejected from lower levels, and the rejection was from the previous window that was opened about 2 or 3 weeks ago, and it has held. The market has traded exactly to the top of the window and has been rejected strongly from there, and that suggests there is a possibility of a change of trend to the upside. Now, we've also seen the sellers fail to take control of this market throughout the trading day, and the market has closed above the midpoint level, giving weak control to the buyers. It is fairly weak control, but significantly the sellers have failed once again for the second consecutive trading day to take control. So there is some much doubt about continuation of the trend to the downside. Now, in terms of reversal patterns, this is a potential type of hanging man pattern. It's not quite a perfect one, but the sentiment is the same. A smallish body, but the body here is slightly too large to be a perfect hanging man, and the shadow in relative terms to the size of the body is just a little bit too small. But the sentiment here is that there has been some strong upside price rejection, and the sellers have failed to take control of the market. So we are looking for a potential higher high and higher low. Now, the problem here is that 1687 may now act as a strong area of resistance for this market, so we will need to look to that level. The area at the previous window is now weakened because that area has been closed and we have seen follow through, but we will now be looking for that area to potentially act as some sort of resistance to the market. But remember that the area of the amount of resistance that we may get there is now really diminished quite a bit, so it's not terribly significant now that it has been closed. Down below where the window is trading, however, we do have the top of the cloud, and there is potential for there to be very strong support down around there. It also coincides roughly with 1669, and we have solid support stretching down to the bottom of the cloud around 1634, so solid support down below where the market's trading at the moment. Now, in terms of the Fibonacci Extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down. And here today we see price rejection from below the 61.8% level, with the market almost trading to the 78.6% level, and the market failing to close below the 61.8% level. This suggests that there is a very strong possibility of a change of trend, and the short-term dynamics to a degree are favouring a change of trend, so we're looking for a potential higher high and higher low. But the previous candle really highlights how important it is for confirmation, where we had a similar type of candle trading down through the 38.2% level, the buyers taking weak control of the market, testing almost to the 50% level. We were looking for confirmation. Confirmation didn't happen, so this really highlights the fact that you don't just look at these Fibonacci ratios in isolation, you look at them combined with the short-term dynamics and always look for confirmation of that change of trend. So no definite change of trend until we actually have evidence of it occurring. So potential higher high and higher low is looked for here. Now moving to the Fibonacci Retracement, we're in an expansive mode of that, and the market has moved through the 161.8% level, testing almost but not quite to the 261.8% level. No real indication here. If the market does continue trading down, then the 261.8% level may offer itself as very strong support over the next couple of days, because it coincides roughly with the top of the cloud, so that really does enhance the amount of support just close by to where the market's trading at the moment. Now, in terms of Ichimoku, we have a bullish market in the long-term time frame with the market trading up above the cloud, but the market has moved substantially closer to the cloud, and the cloud is equilibrium, represents equilibrium in that long-term time frame. So the market is trying to find equilibrium, and a very good possibility of the market trading to the top of the cloud and bouncing off there. In terms of the Kijun-sen, the pink line here, we have a bullish market in the medium-term time frame, so a bullish market in the long-term time frame and in the medium-term time frame, but only just, with the market just trading above the Kijun-sen, the pink line. And that Kijun-sen has been flat for quite some time, and this really illustrates very well how a flat Kijun-sen tends to attract price action. In terms of the Tenkan-sen, the market remains trading down below the Tenkan-sen. We are trading a fair way away from the Tenkan-sen now, so we have a short-term market, a bearish market in the short-term time frame, but we are trading a little bit away from there, so the market is looking a little bit overextended in terms of the distance away from the Tenkan-sen. So that suggests that there's a possibility of the market changing trend in the first time frame. So looking across to the Chico span, that here is above the corresponding price action, so it's confirming bullishness that we're seeing in this market, and there is a possibility that that bullishness may be maintained for some time to come, and suggests that there is a good possibility of the market bouncing off these levels. But really, moving forward tomorrow, crucial to this market is the window just below where the market's trading in the area around the top of the cloud is standing down to 1669, but then to the upside, the 1687 level may offer itself as resistance to this market.